Hi, my name is Forward, one of the dealers here at Capital Spreads. I'm joined today by Bill Hubbard, and we're going to be discussing some of the recent topics in the news.
Excellent question. Now, my feeling here is that I think that we got German IFO today. I was a member of the school, thought we'd maybe get a slight downtick. It actually improved by 0.2%.
Yeah.
I was doing a phone-in on Monday with New Delhi Television. One of the things they were talking about was the earnings season in the U.S. was probably not as good as expected. Well, that sort of flew out
last night
with Apple and Facebook. Where my feeling then was saying, well, maybe we have to wait to the third quarter. I think one of the things, though, and I don't think anybody, that doesn't feel the sell-off that we've had, whether globally we're going to blame it on the medical stocks or the biotechs and the tech stocks.
Which performed quite poorly last
Yes,
week.
but I think we probably have a healthy correction in reference to that. We've seen that in how the indices went today. And I think one of the things where if you with the ZEW, then today's German IFO, and the PMIs, everybody said, well, boy, wonderful how Germany's doing. Well, the three things that you then have to look at is the increasing tensions in the Ukraine, the concern about Chinese growth, and I'm concerned too. I think 7.4%, I'd be concerned about 7.4%, and also how it's affecting the emerging markets. Well, to me, if there was a real concern about Ukraine, gold would not be struggling at 12.75, heading towards my level of 12.50 or lower.
Given the recent events, you think gold would be taking this advantage to rally?
Yes, I mean, we saw it,
we've seen it drop below the 1300 level.
Exactly right. And I mean, right or wrong, we've seen it once we got, 13.35, 13.25, 13.10, 13. This is, have all been major technical support levels, which we went through, boom, boom, boom.
Yeah, when you saw it drop through 1300, you got a big sell-off, it fell down. Do you see it staying at those levels? Or
yes, I do. My call from the 1st of January is 12.50 to 12.25, feeling that all the major reasons, there is no inflation, okay? Yes,
especially in the EU right now.
Yes, and there's no, I don't want to downgrade the situation in the Ukraine, but that's not, that's not a tension, so to speak.
Yeah.
And with China, I don't see, I think that's probably a healthy correction.
Yeah. So I know you're not a big fan of the tech stocks, but I mean, we have to mention Apple and Facebook. So last night we had Apple, I think they beat revenue expectations by $2 billion.
Yes.
Stocks up 8.5% just now pre-market. They've announced the stock split coming up. So what do you think about Tim Cook? I mean, he hasn't really been innovating in terms of technology, but in terms of the dividends and stock split, he seems to be pushing out.
I think, are we talking about the techies saying he hasn't been innovative?
Yeah.
But if I'm a stockholder, I'm displeased. And the simple fact is, with the stock split, if you could buy it at 1/7 the price of 500, will you do that? And I think over here, okay, I don't understand this, but I mean, two stocks on my own personal account, okay? I own a little stock called Plus 500.
Yep, heard about that.
And the simple fact is, I started buying it at £1.47. I think it's now close to 7. And if you saw yesterday, JP Morgan announced that they've increased just in the past 2 weeks. They've gone from 4.2 to 10%. And another little stock I like, maybe it's a tech stock, is XL Media, okay? Now, I don't know about Poundland.com or something. And being a more mature man, I will be getting my OAP discount to buy stock.
Yeah. Any thoughts on Alibaba's IPO coming up?
We'll go to the moon, okay?
Yeah.
So the simple fact is, if nobody else buys it, the Chinese will.
Yeah.
And if you've ever been to Asia, I mean, we're talking about, they're already in the 22nd century, okay?
Yeah.
Reference to tech stocks and this. So that will do extremely well. And I think it would also be a situation where the hedge funds, the institutional, will buy it. So as you said, last week we were concerned about the sell-off in the tech stocks. Well, as you say, I mean, Facebook's up 8%. Well, that ain't too bad, okay, for one day. So, going back to your question about Tim Cook, I don't think people will discount that, okay? So he had a bad week, bad month. Who cares? I mean, the stock is soaring. People, as I said, now have a chance to buy it. And what you will see, especially with Alibaba, you'll see the institutional accounts, okay, that will make sure that they have a certain percentage of that stock. So that will continue on.
Sure. Coming into non-farm next week, Last week we saw Yellen being a bit dovish, saying that she expects to keep interest rates low for a bit longer, which seemed to contradict what she said a while back.
She made the mistake of a central bank. It goes back to what Greenspan said 35 years ago. Each 6 months we call it the Humphrey Hawkins.
Yeah.
And one of the senators asked Mr. Greenspan a question, and his response was, "If you understood my answer, you must not have been listening." And she committed the cardinal sin. Because the one thing you have to think about, and I know it's difficult, when the Federal Reserve was founded in February of 1913, okay?
Right.
Their motto, their mantra was non-inflationary growth. There was no number about inflation. There was no number about growth. It's only in the last couple of years where we need a future. We need 2%. There's, I mean, tell me anybody, any central bank that knows what inflation is going to be tomorrow, much less 2 years out. So I think that's going to be a situation. I think one of the things, yes, the U.S. data is getting better. My call for non-farm payrolls is 250,000, okay? For us to be able to compete on the same growth levels, we would have to average 236,000 for the next 6 months in the U.S. to equate to the U.K. So what we'll see a continuing improvement, but I do not see that affecting the dollar until Treasury 10 years start heading north of 3%.
Because I mean, that's another problem. With these low interest rates, the dollar is starting to suffer.
Yes, it is. And also you see it with the euro dollar especially. It's not so much the euro dollar, it's people selling Hungary, Poland, the Czech Republic, etc., and buying Greek bonds, Portuguese bonds.
Yeah, the riskier high yield bonds.
We're talking in 3 years. Portuguese 10-year rates have dropped from 15% to 2.25%. But the Greek issue was 7 times oversubscribed, and you saw, Portugal, had no problem selling bonds. So that's what you're seeing. Now, will that change if then we start seeing a follow-through from the Facebook, the Apple, etc., saying, well, I'll take my profits in the bonds and then go back into the equity markets, which I think will probably happen. It may not happen for a while, but I think it will happen because are we getting into sell in May and go away?
Hopefully not. So we'll just wrap up with any key stocks you'd keep an eye out over the next coming week, or any key commodities?
Well, I would be a continued seller of gold.
Gold, yep.
And so that would affect silver, etc., etc. I've been looking at some of the softs or the raws because of drought conditions in Brazil, although that's improving, also in the States.
So looking at things like coffee and cocoa.
Yeah, and you saw that Arabica was a 26-week high or something like that. So that's a weather play. So I look at those. Again, I like another stock that I like and I've liked for a while as a speculative stock is a stock Quindel.
Quindel, yeah.
I know it got clouded the other day.
Yeah.
But I mean, the simple fact is,
quite heavily.
Yes, it was off 40-something%. Well, I liked it before. I bought some more. I still like plus 500. I like XL, as I say. I'll be buying Saga. I'm concerned about the bank stocks for the simple fact is I don't see interest rates going up anytime soon.
Yeah.
And I think it's a situation where I think you have to look at stocks that have a basic fundamental improvement or something that you know about. I mean, my background had been commodities and banks, so I knew those. I know where the on-off button is for my laptop, but that's the extent of my technical
knowledge. Commodities, what about oil, gas oil, with the situation in Russia, Ukraine?
Well, I think what you're going to see here is I'm a big fan of fracking.
Yeah.
And I think if we were really concerned about the Ukraine, if we were really concerned about Gazprom cutting off the, oil would be 125, 130, right? Struggling at 108 in WTI. And also, if you look at it, there's an excellent article in the paper today, in the Daily Telegraph, if I can say that, in reference to how the U.S. has adjusted their debt to GDP ratio. And so much of that now is in the last 5 years how they become a major exporter of oil. And I think one of the things, the only reason I think that oil is still as high as it is because of this Keystone LX situation, okay? And one of the things you're seeing that is the major reason you're seeing WTI as high as it is. Now there's almost an historical spread between Canadian oil prices in Canadian dollars versus WTI in US dollars, and it's like $42, which is I think the widest it's ever been since Christopher Columbus was a teenager or something. So, but that would be a technical play, okay, rather than any fundamental play.
Okay. Well, I think that's about it for today. We'll wrap it up.
Terrific.
As always, thanks for joining
Thank
us, and hope you enjoyed.